So what exactly happened today and how will this affect us? We want to do kind of a primer on the stock market. I call this Stock Market for Dummies, of which I include myself. I'm going to ask for some help. Money manager and trader Gregory Warr. Gregory, thanks for being here. Let's take it from the beginning. Tell me what NASDAQ and Dow mean. People turn on the radio and they turn on the TV and see all this action. What is all this about?
Well, what's happened is the NASDAQ is comprised of 100 stocks, and that's put into a mathematical weighted index. So each stock has a specific weighting in the index, and that dictates whether prices go up or prices go down based on the individual stocks.
So we're looking at the average here of that.
Exactly. And then the Dow is composed of 30 stocks, and they're also in a mathematical weighted average. And the two of them, you have what's called the new economy and an old economy. The NASDAQ is considered the new economy. Those are your higher tech stocks. The Dow are your old economy stocks.
Industrial type things. Okay.
Like your IBM, Coca-Cola.
Walk me through what happened today. You know, we woke up this morning, we saw the stock market plunge. Then by late in the morning, it was coming up, looked fine, and then it ended up down 114 points in the Dow, the NASDAQ down. What happened?
Well, what happened is 10,000 is a critical point for the Dow. 10,000 is a number people have been looking at for a period of time, and the market had started to come down at the beginning of the year, and had finally gotten down to this point. And this is a point people were looking at. People who were long the market or who were buyers before saw the market get to this point. As soon as it broke, they wanted to be sellers. They wanted to get out of their position. Then what happens is everybody makes a run towards the exit, so to speak, and that's what happens. You have a escalation to the downside, a big push, because everybody's trying to force the market down to get out.
All right, now we've heard a lot about these earnings reports. Basically, companies saying, you know what, we thought we were going to sell a lot more than we did. That's driving this process we're seeing?
That's made a push, because what's happened is companies have come out and said, well, we will meet earnings, but next quarter we may not. They might even be worse. And some of them have even come out and said, hey, we're not meeting this quarter.
So people then not buying, but they're selling?
Yes. They're liquidating their positions.
And some people making a little bit of cash during the middle of the day here. They saw some bargains and went after it?
Yes. When the market comes down like that, hard and fast, what happens is you have both sides of the market to start off with. You have the sellers and the buyers, because there has to be a matched order on both sides. Well, you do have a little bit of buying as the market's going down. Somebody has to buy those sell orders. When it gets down to a bottom like that and there are no more sellers, well, it starts pushing up a little bit. The buyers start coming in and have to pay a little bit higher price. Well, then what happens is it starts chasing back up. Some people also use that to take an advantage of the market. When the market does go in there, they know that it's a good time to buy intraday anyway.
Gregory, I hope you can stick around. We'd like to pick your brain from time to time throughout this hour, because we want to make sure that folks understand that this is not just for financial people like yourself and traders, but this is going to affect us, and that's what we're going to try and do throughout the hour, and show folks how this is going to impact them and talk about what may be happening in this economy. Gregory Warr, we appreciate it. Now, voters need to be paying very close attention to what is happening. The presidential candidate, could it cause food prices to rise or force you to cut back on your upcoming holiday spending? We're going to be looking to answer some of those questions this hour here on Newsfront. And with all this talk about the stock market tumbling, one could raise the question, if everyone just stays calm, won't things just level off? Joining me again to look at the psychology of investing is money manager and trader Gregory Warr. Greg, how much of this is what we're seeing is being driven by individual investors and how much by companies?
Well, it's about 50-50. You get 50% of it from the individual, 50% from money management firms and hedge funds.
Your money management, you're not likely to panic. Regular investors will be, though, when we look at what's happening. How does that drive the market? If people get nervous, and based on not hard information, but just a feeling, what happens?
Well, there are two things that really drive investors' decisions in the market: fear and greed. Greed usually gets somebody in the market. When the market was rallying the last 3 years, people were in and they just couldn't get enough of the stocks. They wanted more and more and more, and the market rallied. Even when we would get momentarily sharp drops, people would still go in and buy more because it paid off. The market would come back quickly. What we've seen recently is it doesn't come back. People came in, they bought a little bit when it came down, it just kept going down, and that becomes a fear factor.
Long-term investors, should they get into a psychological, get their heads into this thing and make rash moves?
They should consider it, yes, because what happens is it's still your capital. If the market comes down, well, you need to preserve that, because when the market does turn around and go back up, you want to have that to go back in and start buying some of the better stocks and better companies.
All right, Gregory, we'll talk to you more throughout this hour. We appreciate you staying with us here at the NASDAQ. We are live from the NASDAQ Market Site on Times Square. And so all eyes are on the Middle East right now. But as you focus on events taking place thousands of miles away, there's a big story at home that's gone virtually unmentioned: the stock market. If you've been watching it lately, it's fluctuating wildly and hitting new lows for the year. We're joined now by Gregory Warr, a money manager and president of Gregory D. Warr and Company. Mr. Warr, thank you for being with us. We saw that big drop in the Dow yesterday. Does the market overreact to these events, or is there something else that most of us aren't seeing embedded in these crises that could have an economic impact at home?
Well, in the markets, we've seen a downturn since the beginning of the summertime, so that's been steady. And then in the last 6 days, we've seen a quite dramatic sell-off here. I think it was more of a follow-through.
Go ahead.
What happened in Yemen, I think, really was more of a catalyst than a reason for the sell-off.
Is it the fear that oil prices are going to be affected by all this? Is that what it basically comes down to?
It could come down to that. Oil prices rally, and then you start having to deal with inflationary measures again. And that would affect the stock market. Right now, we're at a critical level. NASDAQ has come down, and we're right on May lows, and that's a technical point that we need to be wary of. If it holds there and money managers start coming in, we may see a bottom. If it breaks, then we've got farther downside to go.
There's all this focus on what's going on abroad, and even in our own domestic political situation, there is a lot of talk among Americans that everything's okay, there's still a lot of money in the bank, and the economy is going well. Is it going that well? Are you beginning to see signs in Wall Street that things are beginning to at least level off, if not move down the road?
It seems as though things are really starting to level off here. Like I said, we're seeing a little bit of support here. The market had rallied up today, which is a short covering situation. People who have gotten short, expected the market to come down, now need to cover those positions going into the weekend.
What caused that bounce today, though?
Well, that was more or less the lack of selling on the buyer's part. So people who had been in there buying before and needed to liquidate those positions, they stopped that, and then you had short sellers who sell the market expecting it to come down. They now covered because of turmoil over in Yemen. We're not sure what could happen over the weekend.
I don't want to put you in the position of a political commentator, but this is a political year, election year. Are the candidates not talking enough about the state of our economy and the risks that it's on the could be on the downside?
Yes, that could be a big part of it. You know, it is a question that's been on people's mind as far as the presidential election, who we're going to see in office, and that's been going on since the beginning of summer. That's affected the markets also.
All right, Gregory Warr, money manager, we thank you for being here and help us understand some of this. Let's put the numbers up, if we can, for a moment. And one leading cause for the market slowdown is those tech stocks. Remember how hot they were earlier? Well, joining me now from New York to explain what's happening in the tech sector and what you should do if you're stuck holding the diving tech stocks is money manager Gregory Warr. Mr. Warr, thanks for being with us.
You're welcome.
We saw a lot of people make a killing in those tech stocks, and now it seems like the bottom has fallen out. Are they losing their shirts?
They really have. You've had a lot of earnings reports come out that have been weak, but we've had that for the last month and for long since March.
Now, a lot of people still thought, well, maybe I can get a little of that tech action, especially things are changing. We talked earlier, and I know one of your pieces of advice was take advantage of a rally. Does that mean there's still a buying opportunity here?
Well, actually, I look at it the exact opposite. If you are long with this bounce that we've seen shortly today and what we might see over the next couple days, take advantage of that and liquidate your positions, or at least lighten up a little bit. Expect any kind of downturn in the market.
All right, what about the old advice, buy low? If things are going down, should we get in now?
Well, the problem is where is low and what is low. We might find something low over a day, but over a week it really isn't that low. So typically what you want to do is see some support, see some of the bigger players coming in, the money managers, put some money into it, start buying, and see a decent rally at first.
All right, one of your pieces of advice I know is take a close look at your portfolio. What am I looking for, though?
Well, you're really looking at what's really performed. You want to hold on to that, and what's come down and what doesn't look like it's going to hold up for you. And recently, that's been the tech stocks.
Is this trend going to continue, or do we see any change in the coming months?
I really don't see much of a change here. Technically, it looks like we should continue. I think we'll get a short respite right here, maybe for a week or two of short rallies, and that's where I suggest maybe liquidate some of your longs. But in general, I'd expect more of a downturn in the NASDAQ.
All right, Gregory Warr, money manager, we appreciate you helping us understand all these changes. It affects a lot of people these days. We thanks so much.
You're welcome. Thank you.
And ahead in the next half hour.